The broadcast is now starting. All attendees are in listen-only mode.
Welcome, and thank you for joining us for today's webinar entitled 2017 Top 10 India Financial Trends, brought to you by Capron Asia. My name is Zenon Capron, and I will be acting as the webinar moderator. The Indian economy is not likely to forget November 8, 2016. Not only was it the day that Donald Trump, now president, won the election, it was also the day that Prime Minister Modi announced demonetization in India. The two events have already assumed seismic significance since, compared to which all other issues are dwarfed. The Indian banking industry is gearing itself to face the effect of demonetization. All of a sudden, digitization has become much more of an important topic. Similarly, in addition to the impact of digitalization on financial services, the capital markets are reeling from the effect of the proposed policies of President Trump. A more protectionist United States, along with a post-Brexit United Kingdom, could hamper the growth of Indian exports to these countries. The flight of foreign capital from the stock and debt markets since the U.S. elections and the interest rate hikes by the U.S. Federal Reserve is another area of concern. In this informative 45-minute webinar, we'll look at all of these issues and understand them from a little bit more detail from what the impact could be going forward in India's financial industry in 2017. Now, just a bit of housekeeping. I do need to inform you that today's webinar session is being recorded and is run in listen-only mode. However, we would really like to encourage feedback and questions from you throughout the webinar. And since we always get a lot of questions, we're going to go through the presentation in 30 minutes and spend 10 to 15 minutes in our question and answer session. To facilitate the discussion, we'll use two features of the webinar software. The first is the viewer window where you'll see the presentation, and which I recommend maximizing now so you can see it in full screen. The second is the control panel, where you can interact with us. The control panel can be opened and closed by clicking on the arrow button on the Grab tab. In the control panel, you are welcome to submit questions and comments to our presenters. We will be answering as many of these as possible throughout the presentation and at the conclusion of the webinar too. Our presenter today is Anshuman Jaswal, Director of Capron Asia India and Head of Capital Markets for Asia. As one of Asia's leading providers of independent research, custom consulting, and advisory service focused on the financial industry and financial technology, Capron Asia helps clients understand and navigate the challenges they face in a challenging region with a rapidly changing business, operational, and technological environment. With all of our housekeeping out of the way, let's get started. To get the discussion going, let's hear from Anshuman.
Hi everyone, good day to all of you. As Captain mentioned, my name is Anshuman Jaswal. I'm the Director of Capital Markets at Capron Asia, and I'm also heading the financial services for India at Capron Asia. In terms of my background, I have formerly worked for over 8 years with a firm called Celent, which is part of the consulting major Oliver Wyman. During that time, I covered capital markets as a senior analyst, and I've written more than 100 research reports, worked on a number of different topics with regard to consulting assignments, and so on, participated in several capital market events. So that is a bit of my background with regard to capital market research. Now let's move on to today's webinar, which is the top 10 Indian financial industry trends and outlook for 2017. Just to give you a brief roadmap or introduction, we'll begin with a look back at 2016 and some of the important events which have a lot of relevance in early part of 2017. After that, we'll move on to some of the important recent trends with regard to global and Indian capital markets, and then look at the outlook for 2017, some of our predictions of the continuing trends that we see over from 2016, and so on. And finally, obviously, you would have the conclusion at the end. So to begin with, if you think of 2016, we are only 3 weeks into 2017 now. What are the first things that you remember from a capital market point of view, from a financial services, but also a general economic and political point of view? In our understanding, Brexit and the election in the US of Donald Trump as president Those were probably two of the more important events from a global point of view. With regard to Brexit, it to some extent at least puts into question the entire idea of the European Union and the common economy and the common market that exists in the European Union, and also how the European Union deals economically with the rest of the world. With regard to the election of President Trump, certainly you're looking at politics moving a lot more to the right. Some would believe that even to the extreme right since in the last few years, and definitely the election of President Trump is a reflection of some of those views, is a reflection of some of those populist sentiments which are coming into play in global politics, and which have a very important effect on the global capital markets. And especially with regard to today's webinar, we believe that these are two important events, but certainly the election of President Trump is something that would really impact the Indian capital markets and the technology vendors within the Indian markets as well. So coming now to the Indian market, if you look at this picture, this shows the cues that we had in the aftermath of demonetization in the Indian market in November 2016. What this did was it took a lot of currency in the form of large currency notes of 500 and 1,000 rupee denomination from the Indian out from the Indian economy, and this was around 85% of the entire cash in the Indian economy, so it was a sizable amount. And what this picture shows is people queuing up to withdraw money or to deposit money from their banks in the month or two after the demonetization took place. So it has been a significant event for the Indian market, not just from the point of view of all of these people involved, but also from the point of view of the companies that are serving the Indian market, both from the sell side, buy side perspective, and also the IT vendor perspective. A lot has changed in India in the last couple of months, and this image reminds us of what has happened. So generally, I don't know how all of you feel about 2016, but the general or popular opinion was that it was a tough year and a good year to come out of in some ways. So certainly it was a difficult year for the world in general, and we had, as I mentioned, Brexit and the unexpected success of President Donald Trump, which was a part of the reason for that. And then overall there has been a rise in protectionism, which might easily negate any advantage that might exist for especially the Indian companies. And you know, to begin with, the idea is that the presidency of Donald Trump would be much more positive, at least from a business point of view, from an economic point of view, because with his own background, he's certainly more business friendly. But from the point of view of the Indian economy, a more protectionist stance might create a lot of issues. So that is the first concern that we would have in mind when we think of his particular election. Another important thing is the recent hike in US interest rates and the expected hikes. The US Federal Reserve has said that it might increase rates by as many as 3 times in the course of 2017, keeping in mind that, you know, it only happened maybe a couple of times in the last few years. Certainly that is a significant number, and what it means for a market like India is that there would be a fall in the foreign institutional investment, the investment into the capital markets. We're already seeing some of the money go back, and certainly that means that there would be a decline in the volumes in the stock market. It affects the economy overall as well. So there are some other issues that a country like India would have to deal with, along with what we've already discussed and mentioned with regard to demonetization, which has taken a lot of currency, cash out of the economy. Obviously, some of it is coming, a lot of it is coming back in the form of the new currency notes, but there has already been an impact. And just to give you an idea, the IMF has reduced the GDP economic growth rate for India for the financial year of 2016-17. India has a year ending on 31st March for financial year. So for 2016-17, the outlook has been reduced by as much as 1 percentage point. So instead of 7.6%, the expected growth rate would be 6.6% according to the IMF. Other organizations have also come out with similar numbers. So certainly demonetization has had a big effect in the last couple of months, and it would continue to do so for 2017 as well. So while we might in some ways be happy to see the back of 2016, certainly there are a number of challenges that do continue to exist, and therefore we might not quite be looking forward to 2017 just yet, especially with regard to the Indian market. And what I'm talking about here to begin with is the idea of slowing global economy. So this has been compounded by what we have seen with regard to the concerns due to demonetization as well. Similarly, we have seen a very rapid digitization, or the move towards digitization of the Indian economy, the banking system, and the payment system within banking. So while you know, at any point in time, more automation, electronification, and digitization would be seen as desirable, and that is something that, you know, for example, in my decade of work in this industry, I have been advocating and hoping for. The speed of digitization and automation here is the aspect that is worrying, and so we do have some question marks over the ability of the Indian financial system to be able to cope with the challenge of digitization and the you know, the speed at which the government is trying to push it through. So there is a government body called the NITI Aayog, which is one of the planning bodies of the government, and the head of that is a very prominent bureaucrat called Mr. Kant, and he has mentioned that India might no longer need ATMs for cash, and also presumably the branches from 2020 onwards. So within the next 4 years, India hopes to move on to mainly digital currency, or mainly a currency that is you know, being used through the medium of your mobile, or through the medium of the point of sale machines that you might see in a store, and so on. So for a country like India, which is very large to begin with geographically, then has a huge population, more than 1.2 billion, it has around 65–70% literacy, so you have at least 30% of the population. Most of them are adults who are not literate, or not who are semi-literate maybe, and who are not very familiar with technology. And to have that kind of a change for that kind of demographic, you know, it's a big ask. And in addition to that, you are placing a lot of burden on what is already you know, not very efficient telecommunication system. So from the point of view, for example, of the mobile technology and the mobile providers that we have in India, for example, telecommunication is not always reliable. so you would not always be sure of being able to use your mobile for a particular transaction, and to think that your mobiles and your laptops and tablets would become the main means for transaction in an environment like that, that can be possibly even a little scary for some of the people in that market. So certainly digitization is something that we would have to focus on in the course of 2017 and ensure that it goes on smoothly. Otherwise, there are a lot of challenges that you might see for the Indian economy. One part of that obviously is what we are looking at with regard to cybersecurity here on this slide, because the moment you automate an economy, you move it to a more digital state as compared to earlier. Certainly, there has to be a lot of emphasis on cybersecurity, and it's not something that we can take for granted. So just to give an example, the problem we had with regard to the issue with payment over SWIFT for Bangladesh in the last year, and in September for the Indian market, there was large fraud with regard to debit cards. So there was a lot of misuse of debit card accounts, and transactions took place in India, and that highlights the requirement for cybersecurity. So if you're moving the entire economy from its current cash-dependent state onto a more digital environment, certainly cybersecurity is something that the Indian market would have to keep in mind. Now we move on to some of the trends and sub-themes with regard to Indian capital markets. So to begin with, I have probably been a little critical of demonetization. Certainly, there has been a lot of criticism of this particular practice from all quarters, and people are mentioning how there has been a significant fall in proposed investments since November of 2016. I've already mentioned the lower GDP growth rate forecast, GDP going down, expected GDP growth going down to 6.6% from 7.6%, and this has been accompanied by the fact that the small and medium enterprises are expected to bear the brunt of the issues in the economy. So from a banking point of view, from raising capital in the stock markets, for example, and just for the day-to-day functioning, because a lot of these SMEs depended on cash for payment of salaries of their employees. And now when you move on to more digitized and cashless economy almost overnight, they are not very well prepared for this kind of a change. And you're talking about a lot of time that is required, significant amount of investment, a lot of training is required to move these SMEs from a cash dependent to almost cashless kind of an economy. So certainly from that point of view, people believe that they have borne the brunt of the problems that have come about after demonetization. We can't, necessarily only be critical of a move, maybe demonetization here, which has also been praised for some of the changes it expects to bring about in the Indian markets and the Indian political system. Certainly, the idea of a less corrupt society, trying to reduce money laundering in India. So those are some of the factors that the Prime Minister spoke about when he introduced demonetization. There are other issues as well from a political point of view, but from a financial system, from banking and capital markets point of view, certainly the first thing that comes to mind is a surge in bank deposits in the aftermath of demonetization. So that means that there's a lot of cash in the system, in the banking system, which did not exist before, which was not probably part of the actively part of the transparent financial system earlier, because people were possibly hoarding cash. So from that point of view, there has been a surge in deposits, and that is part of the reason that there has been a cut in some of the benchmark lending rates. Most prominently, there was a 0.9% cut by the industry leader, the public sector bank, the State Bank of India, which was followed by the other banks. So bank lending definitely has become cheaper. Again, we do expect the digitization in the economy, the greater use of digital apps for payment, the introduction of new payment banks, digital banks, and so on, and generally a greater dependence on the mobiles and the laptops and tablets, as I mentioned, for payment, along with digital wallets that we would see in the near future, as opposed to cash, which is probably what most of the Indians were using before demonetization. Another important aspect is the greater access for the underbanked. So if you look at the Indian economy compared to some of its other global counterparts, be it China or the European markets and some of the more developed countries as well, certainly the proportion of people who are part of the banking system is much lower in India. Part of the reason, as I mentioned, is the lower earned incomes, then lack of literacy and financial literacy, and the lack of access to bank branches and ATMs is also an issue. So if you look at, for example, State Bank of India, they would have upwards of 11 or 12,000 branches throughout India, but India is a large country and even that is not sufficient. And other banks also have very large banking networks, but this still means that a lot of people are outside the direct reach of the banking network, and that creates a problem. But the moment you move on to more digital kind of banking system, certainly it might make it easier for people to access banking and to be able to use bank accounts, to be able to make financial transactions through banking platforms. The immediate effect of demonetization is something that we are looking at in this slide. So certainly it was a mixed bag for electronic payments in December, maybe a month and a half after we saw demonetization. So overall, the credit card and debit card transactions fell from 938 million on average between the January to October period. The monthly average was 938 million, and that fell to 906 million in November. So there was a decline in the aftermath of demonetization. To some extent, you might believe that the effect of demonetization was quite severe to begin with, but overall the economy became more steady. And so this should change over time, but certainly there was a fall in the number of card transactions that was witnessed. On the other hand, with regard to prepaid payments, including mobile wallet transactions and mobile banking, these rose. The prepaid transactions payments rose from 81 million in the average of monthly average of January to October to more than double of 169 million in November. So just in the month of November, we saw prepaid payments pretty much doubling. So that shows some of the potential for prepaid payments and digital payments in the Indian economy. It doesn't mean that it should continue at the same pace, but certainly there is a lot of potential, and moving on to a more cashless economy would mean that prepaid payments and also mobile banking transactions would rise. On their part, the mobile banking transactions rose from 60 million to 85 million, an average of 60 million between January to October, and that moved on to 85 million, which is around 40% rise in November. So certainly mobile banking transactions also rose in the month of November, and this shows again not necessarily a continuing trend, especially at the same pace, but it shows the potential for a rise in mobile banking transactions in the Indian banking system. So certainly it does give us a flavor of what would come later on. Now we move on to the infrastructure for such automated payments within the Indian markets. So the unified payments interface that has been created by the government and the central bank along with the partners is something that allows individuals and businesses to make payments by using a virtual payment address that does not require the specific bank account information of the counterparty. So obviously at some point in time a counterparty, that counterparty would have to link their account, but once that is done, for example, the seller, they do not need to know the bank account information of the buyer, just to give an idea. So that is something that would probably make it easier to make some of these transactions, and definitely there is a move towards the use of the unified payments interface by the banks, because you already see that there is interoperability across nearly 40 leading banks in India. So all of these banks are trying to create this platform which will make it easier for people to engage in these transactions. So for any user, they can add multiple bank accounts to the app interface. So for one particular ID, you can have multiple accounts that can be linked, and any of those could be used to make a transaction. And as you have seen probably for apps such as PayPal or Venmo in markets such as the US and around the world, even within the UPI or the Unified Payments Interface, the seller can raise an invoice to request payment. So from a pure business and a market point of view, certainly it makes it easier for people to request for payments and to make some of these transactions. So there is a significant business utility as well of this particular platform. Another payment app or a means of electronic payment that has been created recently is the Aadhaar payment app, which allows payments being made using a retailer's mobile phone. So before any transaction is made, the consumer would have to link their unique ID, the Aadhaar unique ID, to their bank account. So this is a unique ID provided by the government, and you have to link that to your bank account. And once that is done, then you can go to any retailer who has this particular service available. So you need a thumb scanner at the retailer, which is available for around 2,000 rupees, which is around $30. So the retailer would need to buy that. Once that is there, the customer can just go to the retailer and use their thumb to make the payment using an easily downloadable app. So from the buyer's point of view, it becomes much easier, and also it becomes easier for the retailer to process any payment, because especially there is no need to remember the account number. The move towards reduction in the number of debit cards and the ATMs is also something that could happen here, because there is no need for any debit card or any cash or anything like that. But it is important to keep in mind from the point of view of the Indian market that this requires reliable internet connectivity. So especially in India, in the rural and semi-urban areas, both reliable electricity provision and reliable internet connectivity are two things that cannot be taken for granted. So as I mentioned, it's good to move towards digitization, but the rest of the economy, the infrastructure within that economy also has to be ready for such a move, and that is something that would have to be critical in the next few months and next few years as well. Now we move on to the advent of payment banks and digital banks to serve the unbanked and the underbanked within the Indian banking industry or Indian economy. So in 2015-16, there was the approval of 21 small finance banks, in addition to the existing banking system, of course, out of which there were 11 payment banks. So these are expected to allow greater reach and access for people who are living in more remote parts of the country, people who normally would not access the banking system. Already three payment banks or three proposers of payment banks have dropped out, so there would probably only be 8 payment banks as of now, out of which Airtel was the first to set up, followed by Paytm. So we might not have as many small finance banks as expected, but there is a lot of interest in the provision of services by these banks. And what is important to keep in mind is that Airtel, along with the another firm which is called Aditya Birla Idea Group, and that firm is supposed to start its payment bank in the second half of 2017. So these two are the leading two of the leading telecom providers in India, and Paytm is a leading digital app or digital payments provider. So some of the move towards providing banking for the underbanked in the Indian economy is going to come from such companies with technological pedigree, and that is quite good also from the telecom connectivity point of view, which you mentioned before, because there is an incentive for such telecom providers to ensure that their networks are effective throughout the country. Otherwise, it does not make sense for them to provide such services. So these payment banks and small finance banks would cater to the needs of the lower end of the banking system, as I mentioned, the unbanked, the underbanked. And along with payment banks, the idea of digital banking is also taking root. So for example, the leading private public sector bank, which is the State Bank of India, has announced plans to introduce a digital bank in the second half of 2017, which would not have any bank branches. So initiatives like this could help extend the reach of India's hitherto constrained banking system significantly. So certainly I would say that while it's very early in January 2017 to say that we would see a lot of success for such payment banks or digital banks, we are moving in the right direction, and we have taken some of the right steps to succeed for sure. Once we discuss the idea of digital apps or payment banks or digital banks, we have to keep in mind that cybersecurity comes to the fore in such kind of an automated or digitized economy. And from that point of view, we have to understand that digitization puts a lot of pressure on the technological backbone of the financial system. I mentioned some of the issues with regard to the malware-related security breach for fraudulent debit card transactions in India in September 2016, and there was also the SWIFT transfer hacking in Bangladesh in early 2016, which means that certainly from the point of view of the financial system generally in South Asia and specifically India, the banking system, the banks themselves, the regulator, capital market firms need to be very vigilant, because cyber risk is becoming more prominent for the economy overall, and we would have to cope with much higher electronic transaction volumes while having to modernize very quickly. So while it's good to be moving in the right direction, the capability to be able to handle those kind of volumes, the importance of the underlying backbone or infrastructure being in place, that is critical, and cybersecurity is one important aspect of that. Against this backdrop, we also have a greater role for anti-money laundering systems or platforms, because as I mentioned, the initial idea, a part of the reasoning mentioned by spoken about by Prime Minister Modi when he announced demonetization was to reduce the level of reduce the level of money laundering in India and ensure the anti-money laundering capabilities of platforms of Indian banks are at the level desired. So there is a strong expectation from the government that banks should monitor all the transactions that occur within their systems. So this places a heavy burden on the banks within the Indian financial and banking system, and the increased emphasis on self-regulation from the central bank is part of that. While this is a challenge, certainly modern technology can help banks in India as it has around the world, and anti-money laundering software, for example, can detect patterns of suspicious transactions in a highly automated manner. So, you know, AML platforms are not very novel and new for the Indian market. Several banks already use these, but in terms of how important they've become, how central they've become, certainly demonetization will be created for increasing the need for such systems and for the level of the rise in the level of sophistication that is required on part of the Indian banks when it comes to anti-money laundering software. So that also would have to increase. On the part of the leading global vendors which provide such AML platforms, we believe that they would have to certainly rework or tweak their offerings to meet the specific demands of the Indian market. An example could be, the rapid move to a more digitized economy that we are seeing in India. The large numbers, this is a country of 1.2 billion people, and certainly you would look at a lot of low value, high number transactions that take place. So in terms of the number of transactions, it might be much higher, but the value of transactions might be lower. So the way in which you would catch suspicious transactions would also have to be different. So in the aftermath of demonetization, just to give you an idea, one of the ways that businessmen tried to bypass the move of demonetization was to use their employees to deposit some money in their own bank accounts just to escape the attention of the revenue service. So people use novel ways of trying to avoid having to get rid of that cash. So certainly we expect that such different ideas to bypass the monitoring by the revenue service, the central bank, the government overall would continue to happen. And it is important that the anti-money laundering platforms and softwares have the capability to catch such new ways of avoidance and surveillance within the Indian banking system, which because of the specific requirements of the economy might be different than what we see in other parts of the world. While India does have some idiosyncrasies in its banking system and its financial system, certainly there is a lot of things it has in common with the global financial system at this point in time, and blockchain is one of the main areas or aspects that we see a lot of movement even in the Indian economy. So it could be an important means in the banking system to modernize all forms of payments, loans, and trade finance transactions. We have already seen several leading global technology providers in the Indian market that have begun to invest significantly in blockchain technology, and we expect that in 2017 it will become more prevalent. And to begin with, it would be used for the low risk, high reward transactions to dramatically reduce the transaction time. But in due time in 2017-18 and beyond, we certainly expect that in the Indian banking and in capital markets, certainly blockchain would become more prominent, just the way it is expected to be elsewhere in the world. Another area which is becoming more popular is the use of cloud services. So there is rising interest in cloud services from some of the leading Indian financial service firms and Indian banks. The Indian markets are becoming more integrated into the global economy, and it is expected that a large proportion of future investment in technology would utilize the cloud. Some of the main reasons for this interest also include the downward pressure due to a struggling global economy and the cost effectiveness of using cloud services. So it reduces the burden on the IT infrastructure for any user firm, and certainly makes it easier to harness some of the benefits of economies of scale that are available to the providers of such services. Similarly, we expect that big data technology would also be utilized more by the Indian market. We've already seen that in the last decade, large Indian banks, for example, have been using various forms of big data analytics and technology. It has been used for managing customer experience, for reducing risk exposure, and for social media sentiment analysis. But certainly from the point of view of mid and small sized banks, we believe that they will utilize this more in India in 2017. So 2017 will probably be the year in which this technology reaches critical mass with regard to the Indian financial system. Just to summarize some of the trends that we expect in the Indian markets in 2017, we believe that certainly it is a tough market environment due to global uncertainty, and there is also the possibility of further US interest rate rises that could lower the foreign institutional investment and overall investment in the Indian economy. And from the point of view of banks and brokerages, the technological disruption would add to the complexity, but we should keep in mind that these challenges also bring opportunities for the firms that are able to adapt and modernize quickly. So certainly the cloud has a silver lining here, and we would see new firms emerging in the Indian markets which take advantage of this very challenging environment. With regard to the stock market, just to give you an idea of what we expect, there has been a lot of fluctuation with regard to the turnover of volumes in the leading Indian stock exchange, the National Stock Exchange, NSE, which operates out of Mumbai. And this has been in line, the fluctuation in 2016 has been in line with this performance since 2014. We expect these kind of volumes to we expect them in 2017 as well, but it is important to keep in mind that there is volatility in the global economy which affects the Indian market, and also the Indian economy itself is expected to grow at a slow rate, so that would also impact some of the volumes. So there might be some kind of a downward trend as well if things do not work out in 2017, but the fluctuations certainly with regard to these volumes are expected to continue. Similarly, while there is a certain amount of fluctuation in the derivatives trading turnover, the increase in volatility and uncertainty usually impacts the volumes in the derivatives markets positively, and there has been growth in the Indian market, especially here we can see for NSE, and we expect the trend for growth in equity derivatives turnover to continue in 2017. The financial services IT vendors certainly would face a more difficult time in 2017. For example, NASSCOM, the industry association or body for IT services, has reduced the IT industry growth target for 2017 to 8 to 10% from the earlier 10 to 12%. So already, we are in early Jan, and they've reduced this target growth by 2%, and the factors contributing to such growth and weaker growth include the rise in the use of cloud services and artificial intelligence, which means that over time the use and the revenues for Indian IT services vendors and providers would go down as people look for more cost efficiency in the kind of IT platforms they utilize. Another aspect that we have to keep in mind is the clampdown on H-1B visas in the US market, which could impact the growth further for the leading Indian IT vendors and also firms such as IBM or Deloitte, which have a large employee base in the Indian market. In terms of the payment apps, certainly there is a lot of potential for driving digitization in India, but as I mentioned earlier, we should not get carried away. So another example of payment app released by the government is the BHIM or the BEAM UPI based app, which will utilize the common or unique ID that each individual adult is expected to have in India in the next few years for biometric authentication. So again, if the infrastructure is in place, it should automate and make payments much faster and easier. And it has been downloaded over 11 million times since its introduction in early Jan. So there is a lot of promise there, but there are also concerns. One is the overall IT and telecom infrastructure in India. The second is that, for example, for this particular app, it does not have a very user-friendly interface according to some of the early reviews. So dependence on apps which are still being improved or in progress might make it difficult to move quickly onto a more digitized economy. So this is something that has to be kept in mind, and we will see it play out in 2017 as well. As I mentioned earlier, cloud services and big data is expected to increase competitiveness and efficiency in the Indian market, and vendors will be able to offer more flexible deployment options, and firms will use more big data analytics in the Indian market and in the banking and financial system in 2017, and this should make them more competitive and efficient overall. In terms of the regulatory efforts, this slide mentions, for example, the regulatory initiative that would be critical for blockchain platforms to succeed in India. But with regard to the entire presentation, we can certainly say that not just in blockchain, but overall, for example, for cybersecurity, for digitization, certainly the Indian regulator has to take a much more active approach. There has already been a mention for a separate regulator in India for just payments. So just one part of the financial system might need a new regulator in the context of demonetization, digitization, the introduction of payment apps, payment banks, and so on. So what this shows is that there is a lot of need for very active regulation within the Indian market in the next couple of years, and we need to have a regulator that provides the right incentives to develop and utilize the technology at hand. So just to conclude, it has been a tough 2016 and early 2017. We do expect a lot from digitization in the Indian market, but along with that comes the requirement for greater cybersecurity, and we also have the the interest and the advantage of having new technology available. So there would be more use of blockchain, cloud services, big data, artificial intelligence, and the new payment apps and so on that are coming into the market. So for all of this to succeed, however, the regulatory buy-in would become paramount, and there has to be more active regulation within the Indian market, and the right incentives have to be provided. So once again, thank you for this opportunity for me to speak about some of these topics in this webinar. And now I would like to hand over to Zenon in case you have any questions or doubts with regard to this presentation, any issues that you would like to mention. Please, you can put them forward to us now.
Great. Thank you, Anshuman. And I hope that everybody found that valuable. In the background, I've been getting questions, and so I realize we're a bit over time already, but hopefully we can get through a couple of these questions now. And if we don't get through them now, we will respond to you on email. Anshuman, the first question comes from John, and John was asking, what about fintech? What is fintech's role in this? You mentioned digitization and payments. What about the rest of the fintech industry? And that's a really interesting question, because I think, here in China, we see everything that's happening with China fintech. What about India, with the demonetization and everything that's happened, Anshuman? What do you think will happen with fintech in 2017 in India?
Sure. So, China is an interesting comparison, because in my view, fintech has taken over the Chinese market much faster than, for example, in the Indian market. But certainly I believe that demonetization was a spur for the Indian market. We already saw a significant interest and investment into fintech in India beyond payment apps, other interest in regular technology or regtech, interest in blockchain and other new forms of automation. So certainly there was some interest in fintech. We expect it to be the move towards greater adoption of fintech to be much faster in 2017, simply because of demonetization and the direction the overall Indian economy is taking. But I believe that, just to put it in perspective, it won't be fintech in India would not grow as quickly as possibly in the US market or in the Chinese market, but it will still be one of the leading economies in the world in terms of the experimentation that would go on and the adoption that would happen.
Okay, great. The next question is from Andy, and Andy's question is, you showed that card transactions dropped and mobile and prepaid increased, but cards dropped about 5% compared to mobile 40% rise and prepaid 100% rise, which was the overall change in November, was a big increase in electronic transaction. So the move, kind of the demonetization, seems to have been successful. Was this continued in December, and is it a trend that we'll see continue going forward, I guess, in 2017?
Sure. So the greater use of prepaid transactions, of mobile payments will be seen in 2017, and later on we are seeing a lot of interest in some of these mobile payment apps that are being released. People are trying to link their IDs to the banking accounts and use some of the technology available. So that would continue to happen. What I believe is the main reason for the fall in the card transactions is that there was a jolt to the Indian economy in November, and people were just trying to figure out how to operate in this kind of environment, and to some extent people also stood back, so they reduced their overall transactions. So, the fall into card transactions because people were not transacting or buying as much as before because they just wanted to consolidate before they started going back into the economy. So overall, the use of transactions, card transactions, is expected to increase as well in a more cashless economy for sure. But as I mentioned, the interest of the government or the push from the regulator and the government side is towards an economy in which we also do not have ATM cards and debit cards and even credit cards. So they are trying to push it into a very different direction. So even though card transactions will probably rise now for the next few years, the government wants to push it even further and remove cards also along with cash from this economy. So it's a very adventurous, it's a very risky sort of a move, and a lot of things need to be in place for it to succeed.
Interesting. I don't often get jealous of other financial industries being here in China, but certainly everything that's happening in India is setting it up for an interesting 2017. So thank you very much, Anshuman, for your webinar presentation today. Unfortunately, we're out of time and we're unable to answer all of the questions that you all, the listeners, submitted in our webinar today, although we have been answering some in the background and we will be responding to you individually if we didn't get to your question. As mentioned during the session, today's discussion was based on Capron Asia's upcoming 2017 Top 10 Trends in India's Financial Industry Report, which is available as part of Capron Asia's subscription service or as an individual report. If you haven't already registered for this valuable service, we'll also be providing a link to do so in the email, and you'll shortly receive a thank you for your attendance today. This email will also contain a link to the recording we have been making of today's presentation, so if there's any information that you missed, or if you want to listen again at your own pace or share with colleagues, you will be able to. Once again, Capron Asia appreciates your time today. Hope you found the webinar interesting, and this will be one of many series that we'll be presenting out through the rest of the year. This concludes our webinar today. Thank you for joining us.